Well, let's talk about transportation. For that, we'll talk about Old Dominion, which is what do we call these people? They're like a trucking company?
Trucking, yeah, or freight
company.
line.
Okay, freight line. That's what I was looking for. Their symbol is ODFL. They are in the trucking industry, short on the float, not too bad, but not great, 8.1%, 84% institutional owned. We do see a P ratio of 40.1, which is high, but the industry is at 61.4. Price of sales is high also, 7.5 versus 1.4. Price to book value, 9.4 versus 3.2. And price of cash flow staying in line is high as well, 30 versus 15.1. PEG ratio is not great at 5.1, but better than the industry at 11. Now, we do see over the last year, the earnings are down 11.7% for Old Dominion, but the industry was down 21%. Sales, they fell by 5.5%. Industry up 2.5%. 5-year growth rate from the analyst for Old Dominion is 8.8%, about half the industry at 17.6%. Now, you do get a very small dividend here, about 0.6%. They use about 25% of their free cash flow to pay that out. Look at the balance sheet. Current ratio is 1.4 versus 1.3. Finally, one thing kind of excites me. Debt to equity is 0. Company has no debt, so that's very helpful that they can really weather these storms. We do see a net profit margin. Another thing kind of exciting, 18.6% versus 2.7. Return on equity, 23.8 versus 15. We see that the free cash flow is $955 million, almost double the industry at $505 million, or billion, I'm sorry. So these are things, no, that's probably is million. I'm sorry, it is $505 million, not billion. What do you got going forward?
I mean, I'm just kind of confused. I'm gonna say.
I know you got the confused look on your face.
Yeah, current price here for Old Dominion, again, their ticker symbol ODFL, $193.97. Year to date, the stock's been really well, up 23.7%. And I say I'm confused because, I mean, the 10-year return, I mean, I would have never guessed this. 745% is how well Old Dominion's done. You look at that 52-week range, $126.01 is low, and the high $221.63. And the big reason for my confusion, you already talked about those valuation ratios, but yeah, the forward PE, I mean, gosh, you got to December 2027, estimated earnings per share is 6. That means the forward PE is essentially 35 times, 35-ish times. We have a target sell price of just $99.60 compared to the current level, again, of $193.97. I mean, the stock, I don't know why it trades at such expensive valuations.
And I thought this was going to be a good time to look at this because with the spike in oil, gosh, on Friday, oil was up, 10, 12% just for the day. I don't know if I closed at that or not, but...
It looks like oil surged 35% this past week, which was actually the largest gain in futures trading history dating back to 1983.
Wow, that's surprising. But usually when that happens, usually the truckers will go down because the higher expense for it. But one thing people
Well, that's the crazy thing is Old Dominion was down about 8% on Friday, and it's still up 23% so far this year.
That's true. So it has a lot more maybe to go down there. But the thing, too, that people are not realizing that when they look at the futures, I believe that's only a month or so out. You look further out in the futures, 5 to 6 months, oil's still trading at around $69 a barrel.
Yeah, I would not be surprised. I mean, I do believe this oil situation at least is temporary. I mean, the concern is around the Strait of Hormuz. Obviously, about 20% of all oil consumption flows through there, and right now it is closed off. I don't think it's going to be closed off for 3 to 6 months.
You know, I was looking for it. I didn't have a lot of time on Friday, but I was looking at it. I thought the U.S. was going to have ships to guide people through the
So they're offering right now insurance, but the big problem is, well, people are saying, well, I still don't want to take my ship through there. Even if you pay me back, I don't want to die.
Well, no,
Trump has said the U.S. Navy may help guide the ships through, but there hasn't been clarity on that deal yet. So, I mean, right now the strait is still technically closed, and some countries I know are cutting off production because their storage is starting to fill up. So, I mean, that's why we're seeing these big spikes, but I don't think this problem is going to last, again, a month, 2 months, 3 months. I think there will be a resolution, maybe not on the war in particular, but around the Strait of Hormuz and oil flows. I think we'll have something figured out here within the next couple of weeks.
And I know the president just seems to work every weekend. I think some deal will come out. Something will come out over the weekend, and by Monday, this could be all resolved. Like, yeah, ships are going through the strait.
Yeah, and I think that's the thing. If you're an energy trader, you're riding high right now in energy stocks. I'd say be careful because I think things get resolved. I mean, we talk about Russia, Ukraine, again, has been dragging on for years, but if that gets resolved, you have this get resolved, about Venezuela. I mean, you can see oil plummet back down in the 50s and kind of lose out on all those profits you may have had during this time period.
Yeah. And I did read on Friday that Iran is running out of missiles. So
take that as you will.
And they may not have much left to do. So maybe that's what the president's waiting for. But let's